But when you do look past perhaps the short term and that profitability metric, what do you not like about the story long term?
Well, going back to Bob Iger stepping out, he really built the media business. This year's about the media business. We look at the environmental, social, and governance factors, the ESG factors of companies, and we see a governance concern there, right? He stepped down right as COVID hit. I think he saw the writing on the wall, what was happening in China with the parks. And, he's been replaced by Bob Chapek, who headed up the parks. And I don't think that's really the expertise that Disney needs right now. There's also a big difference in styles. Iger was all about partnerships. Chapek, as you noted, has been more aggressive. He's hounding the state of California to reopen Disneyland, which is in a high-risk area and puts Disney's customers at risk. And we just saw Disneyland Paris close early November. I think another longer-term headwind is the cost. COVID costs money, and they're going to be adding $1 billion to their cost structure next year for safety measures.
Natasha, I'm wondering, one thing that stood out in the call was Chapek talking about their premium pricing strategy on Disney Plus as it pertained to Mulan at the time. And in his words, he said, we think we have something here. What is the delta in margin on film content versus going through the traditional exhibitor pipeline? And if they're going to commit to this, what does that mean, do you think, for margins on the studio side?
Yeah, well, you saw with Mulan, they broke even for that film. And you really see a change in consumer patterns. This is what's working for Disney, right? They've been gaining subscribers through loyalty and releases like Hamilton, Pixar's Soul, which is coming out in Christmas. And when Mulan hit, in the first couple of weeks, 29% of U.S. users purchased Mulan for $30. I am guilty of that myself for my family. So I think that's been a net positive, but it's also important to note there have been few big releases, and they're pushing out the big blockbusters to next year, like Black Widow, like West Side Story.
Right. Few big releases, Natasha. I'm also guilty of purchasing Mulan 2, and I didn't like it very much. But they've had one hit original content show, right? Doesn't this prove the power of their library? 76 million subscribers, and basically what they're going on is the library. So I'm still trying to understand what you don't like about it. I understand that maybe Chapek you don't think is the right person to lead this company, but something he did very quickly was reorganize the company to make streaming a
I think Disney, long term, I do like Disney. I think our sale this summer was really about the short term challenges with profitability. What we saw this quarter is very promising. Hitting that 70 plus million subscriber growth piece. That revenue is up 40% this year, and they just hit the low end of their 5-year goal for Disney Plus in 11 months. That's unbelievable, and we can thank COVID for that.
Shepard Smith here. Thanks for watching CNBC on YouTube.